Good evening, everybody, and welcome to another edition of Live Market Analysis. It's a pleasure to be joining you as we discuss the events of the last week in markets and, of course, look forward to the week ahead. Just a bit of a public service announcement while I have your attention. I've added a bunch of new people recently, and I'm not sure if I've added your TradingView ribbon because sometimes I can't match emails to ribbons if you've sent me a request via Twitter/X, and then it just all gets a bit mixed up. So if I haven't added your TradingView ribbon, can you do me a big favour and just send it to me again and say, hey Carl, you haven't added it. And don't forget there's 4 indicators that I can provide for you on TradingView. You can have a 1, none, or all 4. That's up to you. But there's the trend ribbons, of course. There's the volume that I like to use, and it's got my average volume on it. The optimized true range, so it's quite a bit different actually from the standard true range that you might find. It's very different from average true range. It's just what I like to use to measure high or low volatility on a daily basis. And then what else have I got? My relative strength comparative, of course, last but not least, which compares the performance of a security against another index, and you can pick any index. So 4 indicators, I think, and you can have them all by sending me your TradingView username. Okay, let's get moving today. We better do the disclaimer before I forget. Everything we're going to discuss tonight is general in nature, has not taken into account your personal financial circumstances, objectives, or needs. So before acting upon any of this very general advice, you should consider it carefully or seek the help of a financial professional to determine its appropriateness for you. The rest of the information in that disclaimer is important. You should read it in your spare time. You can catch it in the recording. And don't forget that everything you do in markets is up to you. It's always your decision. You're responsible, not me, and you could lose money because trading is ultimately risky. The agenda for this evening is to take your requests. You're going to ask questions. I'm hopefully going to provide you with some answers on anything to do with markets. Could be stocks, commodities, bonds, crypto, indices, you name it. If I get a chart for it, I'll help you out. Or ask me anything about trading, the methodology, the money management, and or the mindset. Let's head over first while you're getting your thoughts together on what to ask me about. If you're new, just type in, there's a chat window there, type in the tickers. If you're not new, you have a far greater responsibility because you need to type in tickers and the type of setup that you think it is. Okay, and if you don't type in the type of setup that you think it is, I'm going to get very, very angry. No, I won't. But you should be able to do that by now. Let's check out our portfolio management model. I should have changed screens. I don't know why I haven't, but I have now. And we're going to say that Friday's trading was, I guess, consistent with Thursday's sell-off, wasn't it? So we have this candle here, that's Friday. Then we've got Thursday. So Thursday we popped up. We had some euphoria over the fact that the US courts had declared many of President Trump's trade policies unlawful. Who would have thunk it? You would have thought he would have checked that stuff out first. He probably did. He probably didn't care. And then we got that pop up. And then we got the sell-off because he said, well, he doesn't care. He's going to do them anyway. And, even if he can't force them through the way he was going to do them because they're unlawful, he would find other ways that are lawful. And then markets obviously sold off. They were disappointed. And then the sell-off continued Friday to the point where demand side stepped in. That's that downward pointing shadow. The only way you can get that shadow, of course, is that candle at some stage during the trading session, I'm talking about this one now, was quite a substantial black candle. A black candle that if it was maintained, I think would have really changed things for us and our thinking on the demand side control, or degree of demand side control in the market at the moment. So it would have looked something like that at one stage, and that is a picture of supply side control intra-session, of course. And the only way you can get from that, right, to that is if the demand side then came back in, okay, overwhelmed the supply that was in the market, soaked it up, took it out. And then there was more demand. There was motivated demand to actually continue to move that price up to the end. And I would say, look, the supply side really didn't have much ammunition or desire or motivation, clout. by the end of the session, isn't it? So I still think that's a pretty solid reinforcement of everything else we know, which of course is double greens, rising peaks and rising troughs, although those peaks and troughs have gone from extremely steep through here, which is, really strong demand side control, to starting to flatten out. And I think if you add sort of these three candles together, maybe that one and the flattening, we are transitioning from this strong demand side market into more of an equilibrium market. Still, I definitely skewed towards demand side, but we've got a bit more of a balance. Is that something to fear? I don't think so. It just means we've got a bit more of a balance. Obviously, equilibrium periods are transition periods, aren't they? Between the continuations of the trend and between reversals of the trend. We don't know which way it's going to go next, and we'll play it by ear. But for now, I don't think there's any reason to panic. Futures are down tonight, though, indicating a lower open. So what? It doesn't matter where the market opens, it only matters where it closes. So we'll take our cues from the close. We don't want to see it close beneath the low of that shadow, though, because that shadow itself, I think, demonstrates where there was plenty of demand in the system. So if we pierce that demand, if we close beneath that shadow, it tells us, well, all that demand that was there, well, they're not there anymore. All the buyers in there, the excess of buyers in there that saw that value, well, where did they go? Maybe they've got their fill, and if they've got their fill and supply is still ready to go, then we could go down to the next level, which is 18,599. An important candle tonight. A follow through obviously continues everything, but it'll be interesting because that downward doesn't make any sense. The lower open we're expecting. Okay, heading over to the ASX 200, and we're a little bit stuck in the middle, inching higher. Nothing to see here really, is there? If anybody disagrees with any of my analysis, please let me know. But otherwise, it's staying the course. I should have talked about a portfolio management there in the Nasdaq. We're at 2/3 at the moment. Risk allowed, that is your maximum risk. You don't have to be there. Hey, you could be at 30% if you wanted to, if that's how you felt, but you could go up to 2/3 and therefore minimum of 1/3 cash. Is that right? Yes, that's right. Minimum 1/3 cash. And same here on the ASX 200. And there's nothing in the technicals. I can't tell the future. We could get the biggest black candle tonight. Trump could do something extreme. And I wouldn't know it's about to happen because I can't tell the future. But what we can see is 2/3 risk position and happy to be there. Okay, let's find a reason to push us off that. Is there something that we're not seeing in those key benchmark indices? And you've got to pick benchmarks, don't you? So is there something in there that we're not seeing? Russell 2000 could be better. It is being restricted, isn't it, by that long-term downtrend ribbon. And that's a really silly thing to say. I've got to be careful how I say this. If by pure coincidence, it seems to have, it seems to not be able to go above there. Even that's just silly to say. Hey, it's not going past an imaginary line. It's just an imaginary line. So we should get all excited and say, oh, our trend ribbon's so good because on the way up, it's perfect. Oh my gosh, look at that. Absolutely perfect. Then on the way down, it's perfect. But, imaginary line. But yeah, at the end of the day, look, it's still a short-term uptrend. It's not a disaster. I think it is requiring a little bit of extra caution, but not panic at this stage. Okay, that's an important one for me, Russell 2000. You know how important that is for me. Should we look at the mid-caps? Let's look at the mid-caps. Interesting. I mean, bigger than the smalls and smaller than the bigs. Hard to say, it's somewhere in the middle of the two. Somehow. Let's head over to Europe. Yeah, look, a little bit softer there, certainly on the CAC. DAX is fine. I mean, that's reassuring. When I see that, I go, okay, we're probably fine. We're probably fine. And not that it matters somehow, but the Spanish market says we're probably fine. Let's go to Asia. I think we're probably fine. Yeah, I think we're probably fine. I think we're probably fine. I think we're probably fine. It doesn't look like anything in the world is about to blow up. Okay. And we've obviously looked at the Aussie. Just very, very quickly here, just checking out some of the local indices for those of you who might favour a sector over another. Discretionary looks okay. Nothing special. Energy looks okay, actually, but certainly nothing special there. Financials looks okay and looks pretty special. Gold looks more than okay, looks pretty special. Healthcare looks okay, nothing special. Technology looks very good, very special. That's the other technology index. Materials looks okay, nothing special. Resources looks okay, nothing special, maybe a little bit of a turn there. Property looks okay. Staples looks okay, nothing special. That is telecommunications, looks great, very special. Utilities looks okay, nothing special. Isn't that interesting? What did I say on pretty much every sector? Looks okay. I mean, look, I did. I didn't say looks terrible. What does that tell you? In every sector of the ASX, at least looks okay, and some of them look really good. It would, famous last words, it'd be hard to see this whole thing unraveling from here, given those technicals. And on based on Friday's candle, you would have read it in this morning's write-up of ChartWatch ASX scans. There were just so many longs out there. It's back to bull market longs. It's back to pre-Valentine's Day number of longs. Wasn't that way tonight on today's candle. It kind of flipped back to the shorts. But, you know, when you're starting to get days with those just pervasive longs, either the money that's got us here is completely wrong, or we're going to be fine. Logically, isn't it? Those two alternatives. Let's go to the base metals and see if there's anything sinister in here. Is there? I mean, these are obviously the canaries in the mine shaft for world growth. We'd love to see them improving. That would be great. Aluminium is not improving and doesn't look great, but not completely awful either. Copper actually looks fine. No troubles there. Nickel doesn't look great. Lead doesn't look great. Tin's taken a bit of a turn, hasn't it? And zinc looks pretty awful. So they're not good. Lithium carbonate, you wouldn't say this necessarily represents any great global growth picture there. It's got its own demand supply dynamics, or mainly supply dynamics. And that's it. Let's head over to the ChartWatch, the TradingView screen, and we'll kick off with gold. I might change this to the live market analysis layout, because that's where all my markings are from previous sessions. And gold looks good. Yeah, no complaints. It surprised me. I thought we were seeing the beginning of the end. Certainly the way Aussie stocks reacted with that enormous black candle. So I wonder if I can get it on here. Probably be quicker. No, there it is on here. So this black candle here. And actually pretty neat, because harder to do this over an angry broker. I can, but harder to do it if we go back to gold. And you know, it was that move. We anticipated that drop. It was on that day that we did it, and anticipated that drop. That drop wasn't as bad as what we did, so probably read too much into it. Anyway, bottom line is, I don't think gold looks terrible at all. It looks strong. It's holding trend. Today's candle is kicking that trend back off again, but it's a live candle, so we'll discount it for now. We didn't look at silver. It's not going anywhere. Probably didn't need to look at it while we're here. No, I'll come back to those. Let's keep moving. High-grade copper, starting to get a little bit of activity going there. I did cover it on this day and said, you know, again, it's got a bit of a pulse, and ditto today. Bit of an upper shadow there, but at least it's got a pulse. Iron ore, no pulse. Uranium, how's this pulsing? It's at a pretty critical juncture here, isn't it, really? I mean, it could either, you know, sort of put up or shut up. It either puts up and cracks through 72.50, 75 in a hurry, and you've got to say that bear market in uranium is over, bull market, new bull market has begun. Rolls here closest beneath that short-term uptrend ribbon, and yeah, that was a false dawn, wasn't it? And it'll probably roll pretty hard in the bear market. Geez, that would catch a few uranium bulls off guard, wouldn't it? Because they're getting pretty excited again. Let's have a look at the natural gas, trending down. Crude oil, West Texas, a little bit of a pop, but otherwise still very much range bound, and confirming there on Brent. Neither here nor there on Newcastle coal futures, that's thermal coal, and very flat also on coking coal, that's metallurgical coal. Before we go, we'll have a quick look at the Bitcoin chart, heading back to not bars, but candles, and having a quick look here at Bitcoin. Pulling back, not ideal. False starts like that for Bitcoin can be problematic when it looks that good and then doesn't do it. Let's just say as long as it stays above that short-term uptrend ribbon, we're probably fine. If it closes beneath it, then we've got a bit of a roll, maybe a little bit of a false start there as well. US dollar index starting to roll. That's interesting. It'll be interesting when we get to the charts. Aussie dollar, let's have a look at that. It's being supported, isn't it? Supported by the long and short-term trend ribbons there. Might be worth a little bit of a specky play on that one. I'm curious, so I always do need to check this one here because I need that to go down. I need it to go down real fast because I'm running out of time. And also this one here, because I'll be paying the equivalent of, not that you'll be eating a Big Mac over there, but it's like $30 equivalent on the Big Mac index. Do you know what the Big Mac index is? So, you know, you're paying closer to $30 for a Big Mac in Switzerland, where I'm heading very, very soon. Let's head over to the bonds to finish off our whip around the grounds, and we'll start off with US 10s. So I can't see, we saw the US dollar rolling there, but I can't see it in this. So it's not a bond market sell-off. So that's okay. Why is the US dollar rolling then? Stocks are fine, bonds are fine. I don't know. Maybe interest rate cuts. That's what the twos are telling us. Short-term yields are heading down. Rate cuts on the horizon. I don't know. I guess we'll find out at some stage, won't we? I didn't mean to pick that, but it doesn't matter. I'm just checking to see. Red flags here. Is there anything really sinister going on? And there isn't. This is all stuck. All of this stuff stuck in the middle is all fine. That's just reacting to the RBA. So all good there. You know, nothing really to push us off our 2/3 risk position if you want to be there. Okay, thank you for following along and being so patient. I'm going to head back to the Amy Broker screen. We'll do everybody's requests, starting off with offline requests from Mick. So Mick wants me to look at DUG for him as an aggressive entry. Okay, yeah, this is just potentially aggressive entry. I don't mind it actually, Mick. I don't think we're going to make one-to-one into that short, long-term uptrend ribbon. That would be the only thing. But you're on the right track in terms of it's doing pretty much everything else we want to see. You know, we've got a bit of a base pattern through here. Are we rising peaks and rising troughs? Not quite, but it's not a train wreck either. Do we have a predominance of demand side candles? I would say this last candle tips the balance. Decent volume, very, very, you know, it's very good volatility. Just something happened today, something of note happened. And if there was news, I don't care. I don't want to know. Could have closed better. Could have closed a little bit closer to its high. Short-term trend ribbon is not green. So it's not quite there, but at least of all the people in these sessions that ask me about aggressive setups, you're the closest to actually having the criteria for it. Obviously not a turnaround setup yet because we don't have an amber downtrend ribbon yet. So all I would say is a little bit too aggressive for me. So you can do anything you want, Mick. At the end of the day, you've got a lot of stuff going for it. And this is just balance of probabilities, isn't it? So my methodology, and I teach you my comfort level. And who cares what my comfort level is? You're going to have a whole different comfort level. You need to trade a model based upon your comfort level and then see how things turn out. You say, look, Carl, you know, I'm more aggressive than you and I understand the risks. And this is better than what I was doing before, right? Before I was just punting, right? I was just, oh yeah, that looks good, or that doesn't look good, or that's got a great story, or that's hot in the chat room. At least now I can see how this whole supply demand gig works. And I can see there's demand coming in here, and I'm a bit more risk seeking than you, and I'm going to have a crack at that. But I also know if it doesn't work out, I understand as well. I know that you weren't ready, and maybe it was too early. But you're also going to get into a bunch of stuff much earlier than me too, and pat yourself on the back and say, okay, I got into that ages ago. By the time your turnaround setup came around, I've been in it for 2 weeks. So, Mick, I don't think I can explain it any clearer than that. I've told you my opinion on it. I've said you're close, not close enough for me. You decide what you need to do with it because you've got to make your system yours. Let's go to B4P. B4P. And this one is more for a turnaround setup. And it's actually more than a turnaround setup. It's actually a continuation setup. So with double greens here. You could argue it's potentially one of those hybrids because we've gone through the long-term uptrend ribbon. So those hybrid turnaround slash continuation setups. I'm not going to make it its own setup. I think that's silly. I think we understand what's going on here. Look, I don't mind it. Double greens, that's always a good start. Price action's a bit overlappy. What does that mean? Overlappy. It is a real word, isn't it? Overlappy. Let's go here. 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 We're certainly coming down, and then we do go up into here and here. and I'll explain why in a second, and then we're coming up into here. So for the uninitiated, we have this thing called a short-term uptrend, okay? And that equals from bar to bar, literally. Let's not say bar to bar, right? Let's go candle to candle. I'm assuming you know what a bar is, or that we all know what a bar is, don't we? But candle is more specific. Somebody has their microphone on. Can you turn it off, please? I don't have to find you. Let's go mute all. You're all muted now. Actually, I don't want to mute you all because I can't mute you all because if I forget to change a screen, anyway, I won't forget to change, I promise. Okay, let's go back to here. Candle to candle, higher high and higher low. Okay, they're the two conditions. And we've got a short-term downtrend equals from candle to candle. Let's just go ditto marks. Okay, we're going to have lower high and lower low. Now, everybody can do this. You cannot possibly stuff this up. Okay, let me prove it to you. Let's go here and let's go H. That's the H of that day. That's the L of that day. Tell me if you disagree with anything I'm saying here. There's some notes coming through, but I think that's just alerting me because I changed screens. Okay, let's go here. That's another high. That's the high of that candle, and that's the low of that candle. Let's move that over there, and we're going to label them. Okay, let's just change the color then. I'm going to label this candle candle A, and this is candle B here, right? Okay, so we can all see that the high of candle B is higher than the high of candle A. The low of candle B is higher than the low of candle A. Higher highs, higher lows. That starts a short-term uptrend. Now that short-term uptrend will continue until, guess what? You see a short-term downtrend. So that's going to be lower highs and lower lows. And this is an interesting little case study because right there, it's not a short-term downtrend. Yes, we have a lower high because if you are unsure, have a look over here. That's where the high is, 135. If we go back to this day here, it's 135. So we've actually got matching highs. Yep, matching highs. So is that lower highs? No, it's not. It's very simple. Is it? And we definitely don't have lower lows. So definitely not a short-term downtrend starting on that day. But on this day it is because we have a lower high. I won't, don't need to check the numbers. We can see it clearly, and a lower low. So that day there, let's label that candle C. That's when C equals short-term downtrend has begun. Okay, and then we have a point of supply. Okay, a point of supply is the highest point between a short-term uptrend and a short-term downtrend. A point of demand is the lowest point between a short-term downtrend and a short-term uptrend heading back the other side, so we can see higher highs and higher lows. Okay, points of supplies, points of demand. Now you know how I do it. What we like to see in terms of our price action, and you'll hear me often refer to this as good price action. What's good price action? This is good price action, okay? Where if we look at, say, the last trough, right, or last, peaks, we could call them peaks and troughs, but a peak and a trough describes the shape of it. Is this fair to say? Calling them peaks and troughs is fine. Peaks and troughs describes the shape of what's happening on the chart, but it doesn't tell you what's happening there. I think it's better if we call them points of supply and points of demand. Because who cares what the shape is? We want to know what's happening there. Yes, a peak is shaped like a peak in the mountains, but it is a point of supply. Yes, a trough is shaped like a valley in the mountains, but it's a point of demand. So let's call this the last point of demand is at or above the second last, very important, second last point of supply, okay? And it sounds a bit complicated. Well, last point of demand is above second last point, but all it means is you've got basically separation between these troughs and peaks, right? And the only way you can get that is if you've got really, really strong demand. You've got really powerful motive faces, motive means moving, and very shallow stagnation faces. And the only way that can happen is if there's very, very strong, very motivated demand on the way up, but not very motivated excess supply. And you're going to have periods of excess supply, because nothing goes up in a straight line. All right, you must have these. So if you're going to have them, we want them to look like that. Because the alternative is to look more, so I'll do that and do this. The alternative is to do something like this. And notice that both of these stocks move from point A to point B in roughly the same time, don't they? So point A to point B, right? Point A to point B. So you could say, well, Carl, it didn't matter because I made the same amount of money. So your system shouldn't need to find good price action. But how did you feel along the way? Now, see, I would never label this bad price action. Okay, I would still call this demand side control price action, because that's what it is. It's still consistent. They're both consistent with demand side control, but certainly the degree of demand side control. And what is demand side control? It's just consensus, really, isn't it? Where the demand side and the supply side both strongly agree on something. They both strongly agree they want to be in. On the right-hand side, do they really strongly agree? Do they strongly agree? Do they strongly agree? And we got to the same point, but without that same consensus. It's not clean and it's a headache. This is on the left, much cleaner and much less of a headache. Give me a thumbs up if all of that makes sense to you. Give me a thumbs down if it doesn't, and or ask a question. Okay, we've got lots of thumbs ups. Excellent. That's why we want the good price action. So in this case study here, thank you everybody. The price action could be better. I think I said that at the start, but it's not terrible. So it's not bad price action, is it? So bad price action would be very well. It's not. It actually is starting to be sideways. That was the next thing I was going to say. Bad price action would be overlapping, really overlapping, and more sideways. It actually is starting to overlap and move sideways. So it's actually not good price action. So we've probably got a bit of work to do. And look, we can have stagnations, and as long as those stagnations are happening in a place that makes sense, I'm okay with it, right? I certainly wouldn't begrudge something that. It just means that we're interacting with a point of supply. So we can get a little bit crunched up as we're dealing with it. But we've had a first touch, we've had a second touch, okay? Problem is we've also got another one not far away. Now, let's just summarize what we're going to see. Double greens, check. Price action, look, and you'd have give it a score out of 10. You break things up. How about you do this, all right? You go trends. Well, I think they're at least a 6 out of 10, right? Those trends, 6 out of 10, they're getting better. I could go 6.5. I could go 7 because they're improving, right? Double greens, separations, widening, happy stuff. And after a long consolidation phase, consolidation phase and long previous uptrend, I could probably get to a 7 on those. Now let's go to price action. Give the price action a score out of 10. It's at least 5. Maybe it's a 5.5, maybe it's a 6. Like, you're all going to have your opinions. I'd love, we need to get a better a system where we can interact more, isn't it? I can sort of do these polls, and I probably can if I learn how to use this, but to get your scores here, that'd be really interesting. Your collective scores. And let's go to candles, right? That's our next part. So predominance of white candles, and I think we do. And there's some decent candles in there floating around. And then you might say, well, how are we going at historical points of supply? Do we have an easy run there? Do we have a harder run? And then you're going to come to, like, you've got 4 categories, and you're going to come to an average score, right? You're going to add up all your scores, and they're going to be out of 40. Divide them by 4 as a score out of 10. And, you'll get to the point some stage, like me, where I don't need to do 4 things. I can just tell you, look, that's probably a 5.5 out. Maybe it's a 6 out of 10 at best, but I'm being very generous. And then that's okay. Write that down, Beforepay, 6 out of 10. You're going to get to the end of all the stuff you're looking at today, and you're probably not going to do the 6s, are you? You're probably going to gravitate more towards the 8s and the 9s and the 10s. So all case studies are welcome here. Happy to look at them, because I think there's value in understanding why we might not do this as well. Not terrible at all, Mick. Just, I don't think we're going to find it's my favourite one tonight, are we? All right, let's go to the next one, CVL. Oh, it's okay. This is looking interesting to me. This one is definitely a turnaround setup, because that last is orange. Oh, it's not orange yet. Oh, shit. Can we forgive it? Can we forgive it not being orange? Because everything else is actually looking really good. Civmec, okay. Let's look at the price action. It might look a bit flatter, but what did I say about hitting areas where we are expecting there to be supply? And nobody else in the world, just us, we expect there to be supply at this imaginary bloody coloured zone on a chart, right? Our trend ribbon how silly are we to believe, like if you believe in the trend ribbon, you believe in the fairy, in the tooth fairy, you believe in Santa Claus and the Easter Bunny, and you believe in my trend ribbon and how powerful it is. But look at that, it stopped dead there, and I think it's doing a really good job of working through the dynamic supply there. Short-term trend is up. Candles, I think, are swung. I'd like probably a bit more. A few people maybe looking down at the volume and going, maybe a bit more today. Look, it was above average. So there's a lot of ticks there for me. Forget, so you're not comparing this score out of 10 against all the continuation setups. That's silly. We're comparing this score out of 10 against our turnaround setups. I think I'm going to go 7 here. It's very close. The only thing it doesn't have is that bloody amber trend ribbon, which in theory is one of my rules. So again, we go into these things eyes wide open, Mick. Honestly, I could do this one. I could break a rule here, and Carl's breaking a rule. I know, people running around like they're on fire. Okay, so what? Remember, this is not a black and white hard and fast system. This is a common sense system, and I hate black and white hard and fast systems. I've had them. I've used them. They have not worked as well as what I'm using now, because I didn't have the flexibility, right, to just defer to what the flip is happening in demand and supply, okay? Because I have at different times in a career that is now over 30 years of watching markets every day, like there's nothing else in the world that matters, understood that you can come up with all of these back-tested rules, right, that work on paper and in the computer's memory, and yet when you get to real life, they fall flat on their face because they forget, they're so back-tested, they're so curve-fitted that they've forgotten the basis of all price movement, which is the interaction between demand and supply. And that's what I do now, ladies and gentlemen, which is, hey, if it looks like there's more demand than supply, then it's okay with me. And that's what we're seeing here, Mick. I could do this one. Let's go plus 1/3. Full risk position if you've got it, plus 1/3. Obviously, it's going to be a slightly order of magnitude, slightly higher risk trade than maybe your standard setup, but everything else checks out for me, so I'm happy with that. Let's go. And hopefully that's a really neat case study for you all in just the practicalities of the way to trade a quote-unquote system. I think you could argue that what I do is a system, but then you could also argue, well, it's not that rigid either. Okay, that's all the offline requests. Let's go to you online. Roscoe saying, hi Carl, hi crew, friendly reminder as requested for case study. Yes, thank you, Ross. What was the stock again? You should have typed the stock in and then I'd know which one it was. What was the stock? What was the stock? You have to scroll down the bottom. He's going to tell me now. I could go to X and look at it. Okay, well, I don't want the link. Just tell me what the stock is. Just tell me the stock. Does that doesn't tell me. I go there and I can't see the whole post. All right, hold on. Copy link address. I do want to do this because it's a broken promise, so I don't. I always keep my promises. Okay, I found it. Here we go. HMC. I couldn't see it in it. So I'm in a different Google account, Ross, when I'm doing webinars. Okay, I found it. HMC Capital. Let's go here. He has told me. Okay, HMC. So I asked you all, and I think only Ross, responded. So well done, Ross, and where was everybody else? But I said, look, this is a really good case study. And we have got some history on it here. You can see that we have historically gone FRP a couple of times that you asked about it in session. It would have been all over ChartWatch, HMC Capital. And I want to know, all over ChartWatch longs, ChartWatch long, ChartWatch long, ChartWatch long, every one of those days. Okay. But what I want to know is, where do we get out? Look at that day. That's a cracker, isn't it? That's such a good day. For us, that's a good day. For everybody else, you think about what that day means for everybody else. For most people, they're going to tune in because it closed at 12:27 on the 26th of November. All right, 26th of November, 2024. That was a Tuesday. So there you are, Tuesday, and then Wednesday you come in and you check your portfolio. For 99.999 recurring % of the population that don't do my webinars, the stock went up, right? You checked your portfolio on a Wednesday, 12.45, the day before it closed 12.27, like you're up over 1%. Holy dooly, what a brilliant day. You see, life is beautiful. Yet, what are you lot thinking when you see that candle? Are you going, you're still going, life is beautiful, like this is great, like I'm still making money, but you're starting to think something's not right here. And above average volume as well, substantially above average volatility. Relative strength at that stage is off the charts, literally off the charts. But we've got a problem. The question is, do we respond? You don't have to tell me because I think I know what you think. Some of you are probably going to go yes, and you're right, because in hindsight, it's the best thing to do. Look, I think it's a big candle, and at the very least, if you didn't do something on the open of the next day or the close of that day, because you tuned in 10 minutes before the close, as we like to do. The important thing is we're all on alert now, aren't we? We're all now just looking. We know supplies in the market. We know we've found supplies. That we say this so often. Finding supply is fine. It gives us so much information. It's not bad. We just now need to see how the demand side responds. Did the demand side just go, I don't care about you guys. I'm just going to hoover you up. And that's nothing to do on that day. And probably if you dumped a third, you're probably thinking, I shouldn't have done that. It's too early. Now you're probably thinking, okay, yeah, that's probably not a bad idea. And I think for me, that's my first third there. Okay, because that candle in itself, I don't think is a species-ending event. But when you only do that the next day and then you do that the next day, I feel like I want to just go minus a third. Okay, see what happens. Right, we've still got 2/3. If it shoots back up, happy days. Right, that's all we're dealing with here. And then we go, oh, you probably shouldn't have done that. Now we're thinking we probably really shouldn't have done that. I don't think I want to buy on that day because this is so important. Remember, when this is big, we really want to see some confirmation down here. Oh, okay. Now what are we doing? So what would you do? We actually probably don't even have lower peaks because, and we can check it. Right, and you would do this. I mean, I just want to get through. I've got lots of requests to get through, so I can't take too long. But we definitely have a higher high there and a higher low. So that is a little trough. Yep. So therefore, with this low, this must be a peak. So we've actually lower peaks and we've taken out that trough. So it's almost now there's no discretion. It's compulsory by my model. We have to do another third. And I think that's all we're doing here. You might say, no, Carl, that's it. I'm out of here. That's enough for me. I'm gone. Okay, well, it kind of did the same thing here. And look what happened next. So for me, you'll often hear me talk about pedigree, right? I think the pedigree of this chart means it deserves not to be zero risk position at this stage. But hey, remember what we said. It's not a black and white system. You can do whatever the hell you want to do. But you need to be able to say, this is why I'm doing it, because this is the way demand and supply is changing in the market. I still think we've got our third. Oh, okay. Well, there you go. There's no question now. I wouldn't think now, if you knew, you don't know these things yet, right? But if you've been listening to me for any more than I'd say a few weeks, then you know that there's no discretion now. That's it. There's no discretion. We're done here. We're out. And who cares where it goes next? Okay. Now it's irrelevant. The question now is, where do we go short? And we can't go short yet because we've got a dark green uptrend revenue. You might go, oh, Carl, Okay, well, there's an aggressive short as well. Just like there's an aggressive long, there's also an aggressive short. I've just never taught it to you because I don't trust you with it. But you can think about how it might work. Okay, but even then, this is an amber yet. This is an amber yet, so I can't even claim that. So we really need this to go amber. Okay, so now we're open for shorts. Okay, and that would be quite aggressive because we haven't actually confirmed the long-term trend ribbon yet as dynamic supply. But the writing is on the wall, I think, for this one. Well, there you go, and that's why we don't go in too early. There you go. That's why there's a system. Oof, 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 oof. This actually happened. That's what's so wonderful about these case studies. Oh, okay, well, there you go. Now we're waiting for, that's an intraday dink, isn't it? That's an intraday dink there. So this has got my attention now. Okay, so everything else is set up here. Here, here, here. This is all setting up. Okay. Predominance of black candles. Yeah. So we can wait for a dink. So we can wait to test more the demand side's response and wait for the supply side to come in a little bit higher up. I don't think I want to wait that long. I think I want to get some skin in the game, and that's why we do it this way. We're never all in. Okay, well, it's not happening. So that bounce that I thought might still happen there, just to go up and probe that short-term trend ribbon, just to go up and probe that long-term uptrend ribbon, it didn't happen. And obviously, let's make this very clear right now. This is the most important thing I'm going to say to you tonight. There's no emotion here, is there? It's easy here. It's easy because there's no emotion, there's no money on the line. Ladies and gentlemen, is real trading any different though? Is real trading any different than getting one more candle at a time and having to analyze and make a decision about adding risk, keeping risk, or reducing risk? It isn't. And you have to get yourself to that point where there is as little emotion in your real trading as there is in what we're doing right here. That's your end point. Where should we get out of our shorts? Let's have a look. Not yet. I think we're too early. Look, short-term trend ribbon. Let's give it another candle. The thing about shorts is you want to be more aggressive at getting out of your shorts than you are at getting out of your longs. Okay? Because for some reason stuff can bounce really quickly. Because shorts by their nature, people who are short are very nervous creatures, right? So I think we're okay still. Just trying to get it to just go one at a time, because as you can see there, it wants to go the whole lot. So I have to. We're okay. We're actually fine. And it's okay. We're seeing a little bit of demand come in here, and you can see I'm really struggling to get it to go because I don't know if you can see there. It's beneath your screen. It's gone double arrow, so it wants to do the whole lot. And if I click it, it's going to do the whole lot. It's just a quirk of Amy Broker, piece of junk. See, I told you it was going to do the whole lot. That was in here. Maybe we got rid of a third, I think, on this gap. But that's it. We wouldn't have done 2/3, and you're still short today. Okay, you probably would have added that third back there. So your full risk position on a short. So FRP for new people is full risk position, but in brackets, obviously we're short this one. Okay, and like you cannot get a better case study for how this model works. Now it's perfect. Okay. Oh, but Carl, I did 10 trades and none of them were that easy. You're probably right. Okay, that's about as easy as it's going to get. But you will get these. That's the thing, and they're the ones that really make your year. Okay, when you nail them like that, and you're going to have a bunch of other ones that are going to be hard, much harder than this. Okay, but that is unfortunately the way things work. Okay, thank you for reminding me of that one, Roscoe. I think that is a ripper case study. Adonis. I hope you're well. I am well, thanks, Adonis. I thought it's an ADH. Let's have a quick look. Might have to pick up the pace now. I'd love to do lengthy case studies every week and be on for 5 hours a night, but it's not going to happen. So let us move a bit quicker. Say we've learned some stuff tonight. Let's go Adairs. And I think I have to clear this. There's too much. That's 5 years of live market analysis there, isn't it? Let's go. Looks better now. So we've got obviously decent trends here. Very, very strong trends. We are having a little bit of trouble though. We are compressing through here. No obvious reason, but of course $3 and that major point of supply. But still a predominance of white candles, and that's where we're headed. So I don't mind. No complaints. Happy to do this. It'd be one of those that you'll find appears fairly regularly, I think, through here in ChartWatch scans. Obviously, today's candle is no indication to add risk at all, is it? But next high close, next high close plus 1/3. Full risk position if you've got it. I just want you to just star here, star check R, okay, capitalize, risk to reward, isn't it? Into here, okay. Why here? Why there? So just check your risk to reward. Obviously, we want to be able to make 1-to-1, and in terms of where you are looking to bail out, sort of there-ish, and if the entry is sort of there-ish, you might be able to sneak it in, okay? And that's just going to change how you compare this against some of the other ones. All right, let's go CYL, which nearly made the list tonight, Adonis. And the only reason why it didn't is two reasons. Where that arrow is, so this arrow here is a decent point of supply. And what's going on here? The last time we said next high close, decent way into the SS candle, which is probably the SS candle, something supply. It has to be that candle, supply candle. I can't remember what we talked about last time. So we're okay. Full risk position still, so no change to that. Okay, let's just move that over here. And we're still closer to a next 1/3, obviously, than getting out, no question. But it's the same thing. Whatever I said last week, I still think is the same. And that's why I didn't put it in. I'm still worried about this point of supply. Okay. Well, it's actually, technically, it's not a major point of supply, so I should write that in, but I think it'll behave like one. Point of supply that I'm a bit concerned about. So even if we saw something like this would strengthen it, all right? So we saw even just, like just a little dink, just to show me that the demand side's remaining strong. It's not fearful of that supply side. And then I'd be more likely to have another go at this. Otherwise, because of this, I'm just playing it cool like Fonzie, but happy to be FRP in the meantime. Let's go to, that's the US one. We'll do that one on the way back up. Adonis. Andrew's got, hi Carl, would be great to discuss a few stocks from last week, such as FRS. Okay. Yeah, FRS. Okay, let me delete all of those because I think I've got a couple of simulated candles in there. Looks still okay. Not a great week. If we looked at it last week, not a great week, but not terrible either. Still very much holding this and this. So, it's getting big marks for that. It's also getting big marks for the fact that the price action, I think, still looks pretty good on first pass. Let me see in reality, actually drawing the lines in. And there's no trough here. There's no trough here because there's no higher highs and higher lows. So we are heading down effectively to that close, which is there at this point. And, well, actually, technically, that's not right. It would be down to there because if there's a trough, we would use the low. So technically, so far, we are seeing some signs of demand, some signs, that white candle, that lower shadow at or near the second from last peak. Before that, certainly that trough there, well above that second from last peak. So we have got good price action. It is starting to slow a little bit. Why is it slowing? Everybody can see very clearly the reason why we're up here. So it may be a case here that we're going to see a bit of a consolidation, aren't we? Just a bit of time spent digesting the fact that we're back at 10 cents. There's a whole new generation of traders and punters in this who have become pegged, right? They are anchored is the right word. Learn about this concept of anchoring in markets and in trading. They're anchored that this is a 1 cent, 2 cent, 3 cent stock. So the fact it's 10 cents is blowing their minds. So I think we are seeing, you have to agree, surely you agree with me, that we are seeing the influence of that round number working its way, manifesting itself in the market. But at the same time, and that's significant, think about that significance of that supply there. Look at that, it's actually starting to dwindle. The demand side's still quite relaxed about things. And actually the supply side's kind of relaxed about things as well. It's not our first time at 10. So long story short, I think we should all agree that there's a lot of good stuff going on here. There's a very natural, very sensible pullback occurring. It's not looking that sinister at this stage. What would make it look more sinister? We certainly wouldn't want to see if we got another uptrend It started to look like that with lower peaks confirming that supply is building here. If we don't get the peak and it just keeps going down, that's not great. You've got a really good candle here, okay? Okay, I'm just drawing the midpoint of that candle. Wouldn't want to see it close beneath that midpoint. Certainly wouldn't want to see it close beneath that low point. That's when we're starting to say, well, the momentum is gone and there's no reason to be in this trade. But until I see some of those things, can't really make much of a call. In the meantime, I can't see any reason not to continue to own it with a full risk position. These two candles together, you might say, well, Carl, those two candles together are pretty nasty and they're close to 10. Well, that would be more of an issue of if you were already in it rather than if you're thinking to buy it. Okay, so looking at it purely from that perspective, oh, Carl, I got into it down here. Can you tell me what to do with it now? Okay, well, you know my rule about getting close to round numbers. When they hit 9.5, is that close enough? Even if you didn't, yeah, I think for the past tense, for the people that had it, if you knocked a third off the table there, no complaints to me, and you're running your 2/3. Okay, if you haven't done that yet, I'll leave that up to you. If you don't have it, no, we're not buying it, and it would take a pretty decent. It would take a pretty decent move like this, right? And then a push into sort of that supply with a nice big white candle before we got interested in that. So I think it's 1, 2, 3, 4, maybe 5 candles away from adding risk. If you're on it, 1/3 out. If you haven't done it, make your decision and what you've got left hanging on to. Okay, let's keep going here. LDR. Was this an ad last week? I can't see it. I can't see how we would have added this last week because today is the 2nd, so we would have gone Friday, Thursday, Wednesday, Tuesday, Monday. We couldn't add it on this candle here. That's the candle we would have looked at, so this can't be an ad. The last time it might have been an ad would have been this candle here. Okay, certainly this candle here, certainly this candle here, certainly this, well, maybe not that candle, but this one are possible 1/3. So it couldn't have been an ad there. So I could be wrong, but I can't see how that can be an ad on that candle. We all know that we can't add it on that candle. Let's go to LDR. This one I could see back here, maybe a couple of weeks ago, might have been an ad, but maybe not last week. Next high close, plus 1/3 FRP. Zoom out. Okay, so we can see that we're just having we're spending a little bit of time here at the point of supply. It makes perfect sense that that's the case. Price action is still fine. I've got no complaints about this at all, no qualms. Happy to hold everything I got. You can see the candles are a bit sketchy, but that's the nature of the beast. So just copy and paste that over. I'm still in next high close, happy to go 1/3 FRP on the rest. Nothing's changed here. Let's go zoom normal. Okay. MTM, I think it's going to be very similar. This one, I think we've got an arrow pointing to it, so that might make a bit more sense. And that is, so that's Friday. Was it? Yeah, no, that's right. It's public holiday here. It's not public holidays last week. Friday, Thursday, Wednesday, Tuesday, Monday. Okay, so next high close, plus 1/3 FRP. There we go. Just copy paste. Nothing's changed. So that's good. That's great. Nothing's changed. Good news in an uptrend for a trend follower. That's exactly what we want. Okay, Perry's got FWD, which is a cracker. Very close to my favourite chart, I think, and the fact it just knocked $3 today, isn't it? So we certainly got into $3 here. That's the influence of 3. And then look how shallow the pullback is. I don't think it's been to 3 before. Oh, it has. There you go. But ancient history, Perry. So this is as good as first time to 3 for us. But there you go. Wow. Okay. Well, there you go. It's all Fleetwood, hey? But all good, isn't it? Perfection. Very happy with that one. And it is in the feature tonight. So if we look at store 2, where I keep my feature charts for tonight, these are the feature charts. FWD is definitely in there. Plus 1/3. Let's copy and paste that over. I like it when I can just copy and paste things from previous chats about the stocks. Let's go to GDG. Well, there you go. Which I think if we go back to store 2, we're finding that GDG is the next one. And no surprise that Perry's nailed it again. Let's go FRP from last time. We would have had, this would have been an interesting one. I think we would have found an exit, at least a partial exit before that dip. But, you know, at the end of the day, you would have had to get back into it. Certainly there. I can't remember. I think I ran this maybe here in ChartWatch. Plus 1/3. And yes, well, I don't need to write. Let's go plus 1/3 FRP. I don't need to write next high close because today's the high close. Today's the signal. Thank you, Perry. Let's go to Hayden. Hayden's got Bitcoin, which we did. I said just, you know, the problem with Bitcoin is when it shows that much promise, it drags so much hot money into the long side, and then the powers that be find a way to just roll them out. So as I said, just watch that close beneath the short-term uptrend ribbon because you might see that roll, not the end of the trend at all, just start maybe with a bit of a roll to knock a few of the weaker hands out. That's all. It's we saw price action, lower peaks, lower troughs. You can do that work. I just don't want to go to the other screen again. We have talked about it. Hi, Robert. Let's go to Hoozle. Hoozle's got AZY, which Hoozle, of course, not to be outdone by Perry, has got another one of the 10 from my top list there, my feature charts. And just because the features, ladies and gentlemen, doesn't mean anything. You know, I think they're good. Who knows what's going to happen next? All we need to do here is go copy and paste on AZY one more time. And we're going to go to MM8, which I think is also well done, boys. We've got 4 out of 10 from Hoozle and Perry. And let's go. Oh, there's one down there. There we go. Copy. Wow, that would have been a nice entry. 8 cents. Copy, paste all the way over here. And I don't think there's any explanation required there. We spent a long time on case studies that maybe were like 6s out of 10s, but when they're 10 out of 10s, like what more do you need to talk about? Pictures of demand. And yes, I've got those. Robert's got GHM. GHM, not ringing a bell. It looks great. We must have talked about this last week. We said next high close, plus 1/3 FRP. So that'd be Friday. No, it looks like it didn't trade. So 28th. It's been in a trading hold, has it? I'm guessing. I shouldn't assume when I just count back the candles to days, should I? And yeah, Peter's saying it's been in a trading hold. Okay, so to 28th was a Wednesday. So that's Wednesday, that's Tuesday, and that's Monday. So that's the candle that we were looking at it, and we said next high close. So that's not sufficient. They are high closes within the candles themselves, but we're kind of heading the wrong way. But that's a monster. That's a close on the high. That's perfection. That is the demand side. And in fact, next high close is probably a bit of a misrepresentation, which we should say strong demand side candle, isn't it? Because, well, is that a high close? Maybe not. You could argue that's a high close, but it's not a strong demand side candle. That's a high close. That's, you know, maybe we need to change this NHC and to change it to strong demand side candle. Maybe we can just leave it at next high close and just all agree we know what the hell I'm talking about. Strong demand side candle. So yeah, that's a ripper. Well, we don't need it because that's it. Just saying this equals a strong demand side candle. So we're going plus 1/3 FRP if you've got it. I very much like that. Now this didn't make the top 10 today. Didn't even make the list. I'm guessing because it missed out on the turnover filter over there. Hey, if that was a 1, if that's 0 said 1s, it's binary, of course, with coding. 100% this would have been on the top 10 list. I love that last candle, so it's a yes for me. Let me go zoom normal before we get to the next one, and we're going to go to GTK. GTK. I keep typing things in wrong. Yeah, look, hey, it's a bit sideways, isn't it? But still looking very, very strong. One of those hybrid turnaround continuation sales. So we had a bit of a turnaround, and then we're back into the double greens. Look, obviously Friday's candle is the key candle there. That's the one. Today's candle's followed through well enough in what was a pretty crappy market, so I'm okay with it. It might be a bit slow and steady compared to some of the other ones because it's been a bit slow and steady. But no, I think that's fine. Next high close. Look, I don't think you need to wait. Today's candle wasn't perfect, but again, we don't need to hold ourselves to such a high, a high degree of perfection. Is demand building? Are we seeing increasing signs of excess demand? Yes, we are. So let's go FRP, plus 130 FRP on that one. And keep moving. BGD, Barton Gold. What a cracker. We're not near where we really want this to be. I shouldn't say need it to be, but where we would love it to be, which is obviously right here. And we'll draw that in as a big red zone. And I think if you're getting 95 and up, ladies and gentlemen, for a third of your dough, I think we're all pretty happy, aren't we? So let's just mention that now, because so often we don't talk about this as we say, oh, you should have done it at $1, but let's put that on the table. Hopefully it gets there. Obviously today's candle's not ideal, but we all know it's not enough to push us out of any of our trade. So therefore we must also still be FRP. We're not going to be adding a third on this candle because of the supply that's lurking in the system around there. But if you were to get a strong demand side candle, then I think you could go a plus 1/3. Why have we got so many spaces in there? Okay, because it's still very much continuation for me, still very strong on everything else. So hopefully you're doing well on that one. That would make me very happy as well, because last time we looked at it here anyway, it was 40 cents. We said FRP plus 1/3, and now it's 80 cents. So that's double your money. It's been in ChartWatch many times. Okay, thoughts on ELS, which is still looking very, very strong. Ian, racing along. Drone stock. Oh, Ian, you've ruined it for me, because now I know what the hell it does, and I didn't want to know. Shame on you, Ian. Shame on you for knowing what it is, and shame on you, even double shame on you for telling me what it does. Where did you get into it, Ian? Give me a number. Write a number in there. Yeah, I can't remember, because I can't remember where I put it in ChartWatch, but yeah, obviously it looks very good. And Ian as well, okay. And drone stock or not, mate, we know what we need to do there, okay. So, but only a third. But that's like, when you go to the doctor, he taps on your knee. Oh, your knee moves. That's what that is. That is just a knee-jerk reaction. That is just instinct, or not even instinct. What the knee's not instinct, but what is it? Reflex. That's the word I'm looking for. Reflex. 95 cents. Knock a third out. Okay. Type in a number in. Now, the question is, should we get in here? Well, I'm compelled to. I have no choice, right? Because it's FRP, obviously, but it's still plus 1/3 because it's still a bloody monster. It's still a picture of excess demand. People are still falling over themselves to buy it. But if you're getting in here, you've got that impediment of $1 not that far away. Okay. Let's go to 50 cents. Well done. So 50 is just, I'd love for you to knock $1 on this, Ian. I would think that would be fantastic. Okay, let's go to, I've lost my spot. Oh, okay, that's Roscoe doing the HMC, that's right. Okay, Hayden's got REA, which is warming up. No, it was warming up. But then they had that announcement, didn't they? They were getting sued. There's some sort of class action announced on that day, and I would say it started to sort of that's the day it was announced. But it was, I reckon, the most of the market knew about it on that day. So no, we've got a problem here. Look, I think I'm ZRP on this one, Hayden, and just taking the licking on this one. Look, it's at the same time, it's probably fine also, but it's how long do you want to wait? How long do you want that capital tied up here on the basis, REA will probably go up again at some stage. It probably will, but it's just not the way I operate. So I operate on, well, what's the price action? And the price action is, that's all one move. So the price action is lower peaks and lower troughs. That candle itself is a pretty important one. That's a minus 1/3 on that day, I reckon, because it's taken out. It didn't take out that trough, but it's pretty ugly, certainly by here. I mean, If that's a third, that's a second third. Let's say, look, at most, plus one. I'll tell you where you wouldn't be this way. Let's go at most, risk position. And then where do we alight ourselves of even that plus 1/3? Certainly down here, but if it gets down there, something's really wrong, isn't it? I don't know. Next black candle, it's just you can't see what's going to happen. I agree it was looking fine. I agree it was an add risk scenario, and then there's some news changes the demand supply dynamics. It has to, that's the whole point. Thanks so much for going over the exciting strategies finding supply. The exciting strategies finding supply. I don't know what that means, but you're welcome. You know what it means. Good day. New here, guys, says Al. I think that's Alex. How do I make charts screen full view? I don't know, Alex, but somebody hopefully has helped you. He says it's all sorted. Good. Peter. Hi, Peter. AZY, we talked about AZY. Well done. Definitely on this. GMD has been all over the list last few days. I'm trying to figure out why I didn't put it in today, because that's a ripper. Did I put it in today? Yeah, I did put it in today. There you go, because it is a ripper. Of course it is. So well done, Peter, getting 2 of the 10 as well. In fact, hey, Pete's got AZY, GMD, and check that out. So Pete's got that, and that as his 3 today. Nailed it. Well done. Having said that, Peter, we don't know where they're going next. All I'm doing when I say, hey, nailed it, is that, yes, they are a picture of excess demand as per my understanding of the market. We don't know where they're going next. Peter also saying, I didn't see who's all asked for AZ. No, that's fine. Go for it. So that certainly qualifies, allows you to chip in your next one, which is AUC, which is also on the list. Well done. So that's 4 for you, Pete. It's a ripper. I can't fault that. Let me put something on the chart to remind us in the future that was the case. Plus 1/3 FRP. This is a great session, everybody. Well done this week. Because we have some really, really tedious sessions, ladies and gentlemen, where I'm tearing my hair out. She was saying FRS. For 2 weeks ago. 2 weeks ago. Yeah, cool. Okay, now that makes sense. Got me a bit worried there, because that big upper shadow, there's no way I'm calling a plus 1/3 on that day. Haraju, SRG hey, SRG. Oh, how did I not put that on the list? Very close. Let's have a look at SRG, and let's see why I didn't put it on the list. Which is not that one, is that one. Well, I don't know why. It just certainly deserves to be there. Just that little upper shadow, just the tiniest of little upper shadows, because we're seeing there's some really strong candle closes. But look at this now, and there just wasn't a lot of volume. But hey, there's just probably no supply. Look, Haraju, that definitely deserves to be in the list as well. Certainly, a picture of excess demand. It made the broader list. I was being pedantic and didn't put it in the feature charts, but it certainly made the broader list, yes. And remember, if it's in the broader list, that is by default a plus 1/3 for me. MPW, which is not that one. What is? Maybe it is that. Yeah, it is that one. It is that one. Okay. Well, I can't really. I don't know. It looks like it's some sort of backdoor listing reconstruction. I can't really get a chart out of it, so there's not much I can do with this one. For that reason, but yes, I wish that's definitely the one. Like, it's not any of the other ones there. So yes, all we can say is that it's trending up, and therefore happy to stick with it. But no, I can't do technical analysis on it. Unfortunately, just the nature of the beast. MYS, yes, that one also featured today. It definitely made the broader list, but it definitely went in that day there. I think that day I might have even made it a feature, because it's such a big white candle, took out a bunch of supply, because we know there was supply in the system here, and you can see the volume. It means we took out a bunch of that supply. Decent follow through today. Needed a higher close to get it into the features, but certainly happy with this one. So yes, as a turnaround setup, I do like this one. Certainly FRP. Plus 1/3 also on a strong demand side candle. Okay, so I'm making the transition officially, everybody. NHCs are now strong demand side candles, SDSCs. Okay. Let's go to, and thank you so much for Haraju and Perry and everybody else, all the regulars that are putting in the types of setups as well. I think that's brilliant. Rapama's got the US ones. Certainly we'll look at the US ones in a second. We're not that far away. In fact, we're about to head up the list right now. CEL, don't put any more in, Nicola. That's the last one there, SVR. CEL, which is very good. No complaints. Oh, bit of a point of supply though. So this one is for Alex, who is new, so maybe not as familiar with some of these terms, but we do know that when we hit these historical points of supply, we certainly have defined in tonight's session what that point of supply is. The price action there is very important, but here's the good news actually for CEL. You can see how I've done all this analysis in the past. We've talked about, look, watch that level. There could be supply there. Maybe last week, which would have been the 26th, which is that candle there. What do we say? That doesn't make any sense. Plus one, yeah, plus 1/3, next high close. Well, why would we say that on that day? That's just plus 1/3. And then when did I write this? I don't even know when I wrote that. But let's put, I don't even need to put that there. I think you could go today. I don't think we need next high close. Let's get rid of that and just say plus 1/3. This is a big yes for me. And you might say, Carl, that shadow is a bit disturbing. Well, that shadow is not disturbing. That shadow is a great result. Why is that shadow a great result? Well, because of this, right? But we've dealt with this. Hopefully your eyes so tuned in now, you just go, look, we've dealt with this. Look at that. We've dealt with that point of supply. That point of supply is done. That point of supply is dealt with. We're moving on, and we're moving on in a pretty big way. And that's a solid. Look, remove the supply. Hopefully you guys are just now reading this like a book, right? So we're removing the supply. We know the supply there. We're removing the supply. Hit this. Removed a big chunk of it on this day here. Look at that. We removed a huge chunk of supply. Huge chunk of supply. Like that supply is going. And the other reason why this upper shadow here isn't a problem is 10 cents. So like, imagine if there wasn't a shadow. Like that's the strongest thing in the universe. So of course we got a little bit of shadow, but that's fine. So plus 1/3 for me. I think that's fine. Did I mention that it's fine? I think I did. It's more than fine. Ian, thank you for that response. And Hayden got out. Oh, well done. Hayden saying he got out in the big black candle, which is music to my ears. Like, you know, that Jerry Maguire, you know, he's telling how much she means to him, Renee Zellweger and all that. And she says, you know, you had me at hello, Jerry. And Hayden, you had me at I got out a third on big black candle. Right. SVR for Nicola, and then we're heading back up the list, everybody. Don't type any more in because I won't see it. Solid. Indeed, solid. And let me zoom normal because we should be doing that before we look at every next chart. So we're looking at everything on a consistent basis. I don't have any problems with this at all. I think it's holding really well the short-term uptrend ribbon. So there's that shadow, and today's a move in the right direction. I think you can go plus 1/3 today because of this down. We are in a downtrend. So here's a bit of a problem, right? If we look at this, and this is just using the technique I showed you earlier on. I can just do it a little bit faster than you, okay? So we are in a downtrend. So for me, I look at this and I go, that's good, like it's all good. Clearly, we're holding this short-term uptrend ribbon, like the short-term uptrend ribbon's doing its job, right? And we do have one, right? We've got that, but we're missing the price action and we're missing the predominance of the demand-side candles, just to be sure. So I think if you're going now, the risk, it's not that you can't go because we're still in a demand-side market overall, trend ribbons, but I just think you're taking a bit more risk by doing it. That's all. So how do we have less risk? Well, another follow-through candle here almost puts it beyond all reasonable doubt. Certainly one that closes close to that supply zone. This is a supply zone now, right? And then there's another one up here. But if we can close next to that, maybe even with a nice above average volume candle to tell us we're removing that supply's getting out of the market, then that would be enough for me to go plus 1/3. It might frustrate you. Carl, I should have just get on this candle. Okay, well you can. You're just taking a bit more risk. You've got some good stuff going on, but you've got a little bit less certainty, a little bit less probability of success on the basis that you haven't waited for full demand side confirmation. And if you've got that big white candle, you're getting more of it, okay? If you're waiting for something like this, another little dink. A little dink, for the people that are new, a dink just means a little peak trough move in an uptrend, or trough peak move in a downtrend. Okay, we're basically resetting that price action now. So we're moving back to rising troughs at the very least. That's another little tick. Probability goes up a bit. Okay, wait for a close above this. Probability goes up a bit. But you can see profitability is coming down a bit. But look, if it goes to $10, who cares? But we're starting from a bit further up, or we would have started with more profit. None of those things make sense, but I think you get what I mean. So it's a yes for me if you're happy to endure the extra risk that comes with an early entry. Otherwise, can I just put plus 1/3 somewhere around there? Okay. All right, let's head back up the list. We're only doing US stocks now. To prove it, I'm going to change screens and head over here. I don't know why. Oh, because I was finding that thing for Roscoe on HMC. Okay, let's go to, which screen am I going to? This one. That's still the wrong place. That's where we're going. Okay, and we're just doing US stocks, heading back up the list. For Rupam, we have PLTR. Palantir, obviously the AI stuff. Oh, look at that. Looks great. Last time we looked at it, we said next high close, next demand, strong demand side candle. And we've got it. So that's the day. So I'm going to copy that, paste that, but we're going to change it a little bit because we're just going to take off that bit there, and we're going to leave it that way. Okay, and it'll change in a second. It'll change in a second, I promise. Or it won't. It has. There we go. Plus 1/3. And we might just bring that to front, which is visual order, bring to front. There we go, and click save. Okay. I don't think you need any more analysis than that, do you? Rupam, I'm sure you understand why. Okay. Astera Labs. So we would have looked at this, I guess, on the 23rd. We'd have only had the 23rd candle. Actually, there was a public holiday in the US. Okay, so we didn't. If we're looking at it on Monday, we don't have Monday's candle. They didn't trade on Monday anyway. So we're looking at it on this candle here, and we said plus 1/3 FRP. Still valid, I think. Yeah, look, we had a bit of a pullback, as we saw last 3 candles on the Nasdaq, haven't we? So we've seen that manifest itself here. Okay, let's just move that over there. Rupam, do we need to do anything? Are they species-ending event candles? No, I don't think they are. We're still holding the short-term uptrend ribbon. So we're not happy. We're annoyed. We're frustrated. All of those things that come with, unfortunately, being behind on a trade. We're not that far behind. But, yeah, there's no reason to do anything just yet. I won't draw peaks and troughs on this because I can't draw them as well here as I do an AMI broker, but you know what we're looking for. To tell us that it's time to take some risk off the table. But in the meantime, I can't see any reason why we wouldn't be FRP for now. Let me just type that in, so that when we come back, we've got a bit of a record of what we talk about here. Click OK and click save when it eventually updates. Please update. Please update. Look, click save anyway. I think you'll get the picture. Let's go to Rupam's third and final one, Hood, which is Robin Hood. And still looks fine, you know, next high close FRP, you certainly got it, certainly there. So added risk on that one. In fact, I'm going to go here, and it wasn't a great session, really, was it, on Friday? Yes, it had a nice long lower shadow, but overall market was still down. So that's impressive. That candle was really impressive, plus 1/3 FRP. Let's keep moving. Just the US ones. Heading up to Perry now, VRNA, which is Verona Pharma. Ah, beautiful, perfect. Go here, and go here. Just check to see if there's anything. There's nothing out there at all. All blue sky from here. It's a very, very strong setup. I'm sure, Perry, you're already in this because there's a dozen entry candles there. Plus 1/3 FRP. No need to wait for any high closes on that one. Click save. Perry's next one is PRDO, which is Perdoceo Education. What the hell is that? Oh, who cares? It looks amazing. Let's go here, even better, absolute ripper, and it just seems so easy, doesn't it, on some of these US stocks. And we don't have any other markings on this in the past, so FRP, if you got it, plus 2/3. Quite happy with that as well, if you don't. And Perry's next one is PLMR. All continuation setups, as he correctly identifies. Oh, this is very good as well. FRP, so simple, isn't it? You can just go copy and paste on a trend that just keeps rolling on. Nice move on Friday, Perry, as you would have noticed with that clear out there of the volume, and hopefully clearing a path now to 200. Let's go BKNG, which I guess is the banking ETF. Or not, Booking. Well, there you go, Booking Holdings. I'm mistaken. Looks very good. Let's go 1 week. Looks even better. Is that Booking.com, is it? Which I've just given them thousands and thousands of dollars if it's Booking.com, Brett. So there you go. You've seen the Capilingua effect right there. Booking.com. Plus 1/3. FRP. Let's go save. And rolling up the list to the next US one. Not far away now, ladies and gentlemen. Try not to miss any along the way. Thank you, US stock traders, for being so patient. You're probably frustrated by the Aussie market by now, aren't you? Oracle Corporation. Great. It's a hybrid, isn't it? Hybrid turnaround continuation. It's back double green, but it is clearly a continuation also because we're moving back above that long-term trend ribbon. We've pushed above it. We've come back. We've tested it with perfection. Perfect. Great candles. Great price action now. We can see that last drop is at or above that second from last peak. I can't fault this one for a turnaround setup. I'm not fussed about that. We've got miles to go to get into that point of supply from here. So this is a very high quality turnaround setup for me. In the interest of getting a mix of turnarounds, continuations, aggressives. You can find we know that aggressives are fairly rare, but they can happen. Then this is a very, very strong turnaround setup. So thank you for bringing that to my attention. That was Adonis, and I reckon I'm at the top of the list. As I'm going to read the disclaimer, I will give you a chance, if I have forgotten any of yours, okay, to remind me. But I think I did get to all of them, so I might miss a US one. But don't give me any more Aussie ones. I think we've done those. Nicola acknowledging that it is a public holiday over here for me, which is brilliant. You brought that up, Nicola, and I don't mind. I love these. I wouldn't miss them for the world, but there's no point doing them when other people are on holiday and having a good time. So that brings us to an obvious thing. Next week is a public holiday for Melbourne and Sydney. So let's take a break next week. Okay, if that's okay with you, we'll take a break and we'll come back the week after. So that will be the 16th of June. Okay, so no session next week, respecting the public holiday in the two most populous states of the country, and back on the 16th. Let's go over to, not over there, because I can't say goodbye yet. I need to go over here and remind you that everything we've talked about tonight is general in nature. Follow any of this information at your own risk. Basically, it could blow up in your face. I hope it won't. It probably won't, but it could, and that's the point. Seek independent financial advice that determines appropriateness for you. Trading is risky, and you're responsible for everything that you choose to do with your money. It's been a pleasure chatting with you this evening, everybody. Safe travels for the next couple of weeks, and be safe in the market as well. Obviously, you can catch my daily updates on Market Index in the evening wrap in the meantime, and the daily ChartWatch as well. So still plenty of support. Hit me up on Twitter if you have any questions. Happy to help out there also. All the best for your trading and investing until we catch up again. Bye-bye for now.